Hey everybody, welcome to Options Inc., where we talk about how to become your own CEO and build a successful business in the stock market trading options. We talk about technical analysis, we talk about day trading options, we talk about psychology, mentality, and self-development, and how all of that comes together to build a very successful you and your business in the stock market. We need to understand what's going on. We are at a very critical point in the market today and this week. Today is 28th November 2022, Monday. Let's look over what the market is doing. This is the ES futures. So the S&P 500 futures. If you don't know what the ES futures is, or you don't know what the S&P 500 is, if this is the first time you're even looking at a chart with candlesticks instead of a line, don't worry. This is the first video. So we'll just go over this as smoothly as I can. And in the future videos, I will also start making more educational content on the stock market as a whole. So if you're new and experienced, don't worry. Don't let this freak you out. It's not that serious. It's not that complicated. It's not scary. And if you're experienced to the market, you've probably seen this chart more times than you can count. This is the ES futures. As you can see, ever since the drop from our COVID rally session right here, all the way from down there, we've been in a gradual decline, in a bear market with a lot of volatility. You compare this volatility to what we saw during the COVID rally, look at how much up and down it goes compared to what's going on now. The size of bounces and rejections have essentially doubled, and for good reason. With interest rate hikes, with what's going on in the global economy, with the war in Ukraine and conflicts going around the world. There's a lot that's happening in the market with overprinting of money, essentially, with quantitative easing that took us out of this COVID crash. Now the government, the Fed, are starting to tighten their rates, and this is affecting the housing market. This is affecting daily consumers and many, many other macroeconomic news that brought us to this point here. Now, why is this specific point very important? Well, it's very important because we are at a very, very important zone. We bounced off of this 3623 area and we bounced pretty hard. Now notice the trend lines. We have not broken above the very top trend line. It is a very, very, very strong trend line that has been keeping us under. So this yellow trend line now, as you can see, is the midpoint trend line, is a middle trend going down. Ever since we rejected off of this 4317 area, we have failed to break above it. We tested it at 4317. We tested it around 4175. We tested it at 3931. Now on the 10th of November, Thursday, news came out from one of the Feds in the morning. They were having a talk in the morning. They said they may be able to slow down rates, things like that. The market took that is a very good news and blasted right through my inner trend line as if it didn't even exist. One big candle that day. That was one of the biggest moves of this entire bounce up. Now, the thing is, though, that may have changed the narrative for a lot of people. They may have started thinking this is the bottom. We've hit the bottom of the market. Now we're going to start going back up. And I have to say, you have to be very cautious. Okay, the market isn't necessarily going back into a bull cycle. Remember, in a bear market, the bounces and rejections are massive. It goes all the way from 41.88, for example, all the way down to 36.39. We went from 43.11 area, essentially down consistently well, all the way down to 35.78, while stopping at 38.95. So you need to understand that the bounces are very aggressive, and that's what happens in a bear market, but be a little careful when you want to think about whether this means you're going to start buying into the stock market. Everything's easy, breezy, beautiful, but it's not, right? The reason this week is very telling is because we're coming up on a very key pivot area, a Fibonacci retracement of 0.382 right in this area. And as you can see, we've been touching this area, but we've always been slapped down. We've always been rejecting this area. If you take a closer look, let me draw it out for you. This is a very, very key zone. And there's a lot of selling pressure here. There's a lot of institutions who are keeping this under. until we really break above the top trend line, I would be very cautious to even think we're in a bull market or that the world is somehow fixed and we're not having any sort of economic problems. So even if you were to think this is a bull rally, we're going to go sky high, how is that connecting to the macro news, the macro economic condition of what we're going through? So with all that in mind, it's also important to understand how these trend lines and Fibonacci levels play into our market thesis, because we are coming up on a very key rejection area. We have never broken past really this line here, this Fibonacci line, and ultimately our higher trend line. And as you can see, the market is open right now. It's 2:17 p.m. Today we opened up at 40.18 and we slumped all the way down to 39.47. Let's take a look at the 5-minute chart on the day. So this is where the market opened up at this morning at 9. We shot up, rejected it. We are in our zone, that zone we drew on the daily chart. And look at it. As we hit this area again, we're being slapped down. Whole day of a big downtrend. A lot of investors and big institutions are not as confident in the market as we were before. And with interest rate hikes and inflation and how the Fed is going to react to dealing with inflation and how aggressive they are going to be with their interest rates and many other factors, a lot of big institutions are not bullish on the market. They're not putting in a lot of money thinking it's going to go up because, quite frankly, it has more downside than upside. Because we are in a very key area in the daily chart, we have possibility to start a new cycle down. And as you can see from our daily chart, when we start a move down, that can be very aggressive. And this is August 16th, when we hit the very top of the trend. And this downtrend continued aggressively down until this 35.89 area and ended on September 30th. So we're coming up again in this zone, in this region, with the Fibonacci level here that price is reacting to, and the fact that this area is a strong selling point, and right above we have our major top trend line. We could possibly start a new down cycle. We could start going all the way down to our daily trend. We could break through that and go and test this daily trend right here and make a new lower low. This is the low so far, right? You see the daily trend come down, you see it come down and then get bought back up. So this is a next very key area. And if it starts breaking down through this, we could see even lower positions in the market come early 2023. So all I'm saying is that there's a lot of potential downside. You don't want to get caught in the wrong side of the market. Be mindful, especially in terms of options. So this brings me to my other point of options trading. So for all you day traders, you want to make sure every time you enter the market, you don't have a bias. This is just analyzing what price has been doing in the past and seeing where price could be going. And as you can clearly tell today, we are starting to go down again. Remember that not having a bias is important, and make sure you have a thesis for both sides. What is your thesis for the downside? What is your thesis for the upside? And make sure you have your price levels engaged to know if it goes below this, maybe I'm looking to go short. If it goes above this, maybe I'm going to go long, but don't get caught up in biases. So that's my market analysis. A very short, brief one. I know this is a very first video, so I'm not going to go way too in depth and overwhelm everybody. This is just a very quick market overview of what's happening today. There will be more future videos where I go a little more in depth. I take some time, and instead of meshing a video where it's the first video, then I have to introduce the channel and then go over market analysis, it's going to be a lot more streamlined and it's going to be a lot more specific. As far as the general market analysis goes, that was the analysis. I'm not going to go that deep into it. And I just wanted to say that if you are a struggling trader or you're trying to get involved into the market, subscribe to the channel. I have a lot of video content coming right up in the pipeline, from educational content for beginners to more advanced understanding of option strategies and day trading and how to chart and level and mindset, everything in between. So if that interests you, subscribe to the channel. You can find this channel on Twitter You can find Options Inc. on Instagram as well. Here you go. ES Futures opening up lower, and that 4,000 level is a very strong level. I said this when ES Futures opened up on Sunday night, and there you go. Because of the strong level, we gapped down. Huge rejection. There was a lot of people on Sunday morning, on the weekend, over the weekend, thinking we're going to keep rallying up. Sunday night comes around, ES Futures are down. So I post a lot of charts. I post a lot on the analysis, what people are thinking. Join in the discussion. Join in with the Twitter, follow my Twitter account. And with that being said, I will see you guys in the next video.